Hi, here's a quick update on what's been going on with Southern California's real estate market trends. I looked at Los Angeles, San Bernardino, Riverside, and Orange counties as a representative sample. Let's start with prices. The median price in all four counties declined slightly in January. That makes 7 months in a row of modest declines. And prices in all four counties are pretty close to last year's levels. Well, let's turn our attention now toward inventory. The number of homes for sale dropped a little bit in all four counties during January, and that's unusual for this time of year as many prospective sellers choose to wait until after the holidays to put their homes on the market. So we typically see more homes coming on the market in January. This may be evidence that the Southern California market is heating up a bit. In terms of time on the market, homes are definitely sitting longer than they were last year. Right now, the median days on market is between 22 and 32 days, depending on which county you're looking at. And that's way up from the 7 to 14 days that it was last year. And the homes are most likely sitting longer right now because so many sellers have accidentally overpriced them. And it takes a couple of weeks or more for them to adjust and find the right asking price. So let's look now at the relationship between supply and demand in today's market. Buyers still substantially outnumber sellers in most of the Southern California markets. And kind of surprisingly, the numbers moved further in favor of sellers a bit in January. And the metric we use to monitor this is called months of inventory. It measures the relative supply and demand of the real estate market. And anything below 5 months of inventory is a seller-favored market. And anything above 6 months of inventory is a buyer-favored market. So if the market was heading toward a crash in home values, we'd expect a sharp rise in months of inventory. But we don't see that happening. Months of inventory ranges between 1.8 and 2.7 across the four counties, which is definitely higher than it was at this time last year, but it's still well below 2020 levels, which means the market is cooler right now than it was last year, but it's still hotter than it was pre-pandemic. So what this means for sellers is that they should be extra careful to avoid accidental overpricing. While multiple offer situations are still happening, it's definitely not like it was last year. Those bidding wars are less frequent and less dramatic right now. And there was a lot more grace in the market last year for overpriced sellers that weren't too far off, but that's not the case today. From the buyer perspective, if you've been waiting for the market to begin to shift and waiting for less competition and more opportunity to negotiate more favorable terms, your time has arrived. So with less competition, you might be able to use a down payment assistance program, get some help with closing costs. Certainly repair negotiations or appraisal concerns are a lot easier to navigate right now for buyers than they used to be. So this is a great time for those folks. As always, if you have any questions about this or about anything else real estate related, feel free to reach out to me by a phone call or text message. My cell phone number is 909-576-0695, and I look forward to connecting soon.